Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Bamakshi Doria and with me is Vivek Iyer. Vivek, a very good afternoon to you. It's turning out to be a good afternoon for the markets. Of course, we did see the markets cool off from the intraday highs, but we've also managed to recover from the day's lowest point.
That's right. Good afternoon, Bamakshi. So the brief intraday dip that we saw got bought into, and that's good news as far as the bulls are concerned. The bank Nifty, in fact, was the one that was significantly underperforming, but that too has recovered from the day's lowest point. We have quite a lot lined up on the show. Let's start off with the top headlines. Market comes off highs but trades with some gains as caution prevails on Dalal Street. Midcap index also gains in line with key indices. Realty, pharma and healthcare lead the charge while consumer durables and energy bring up the rear.
Dredging Corp stocks witnesses strong run today following its fourth quarter results. Revenue climbed 66.5% on a year-on-year basis. EBITDA also rises significantly.
Solar Industries rallies over 3% on a strong set of earnings. The company's revenue surges 35% and EBITDA margin grows 215 basis points. The management tells CNBC-TV18 that defense will contribute 40% to their total revenue in the next 3 years.
Dixon Tech under pressure despite reporting a good quarter. The company misses FY25 revenue guidance of 40,000 crores. Management tells CNBC-TV18 that they expect 40 to 45% revenue growth in FY26.
Gabriel India rallies in trade on the back of a strong set in Q4. Revenue and net profit see healthy growth of over 30%, while margin also expands by over 100 basis points.
Well, 24,800 thereabouts is where the Nifty is at. It has managed to recover almost 100 points off the day's lowest point. It's a green-looking screen for now. The mid-cap end of the market is also holding up quite well. The mid-cap index is at 56,480, a nearly 300-point uptick out here as well, briefly outperforming the benchmark indices. The small-cap index, though, not doing as well as the mid-cap index. It is trading with minor gains of around 0.1%. As far as some sectoral indices are concerned, most of them are in the green. Look at Nifty Realty. It's being driven by Raymond, DLF, Phoenix. Nifty Pharma also has picked up. We had several earnings reaction as well as, some sort of positive momentum out here as well. But let's move on now to our special segment, Midcap Movers. We now have Hormas joining us to take us through the midcaps that are moving around in trade. Good afternoon, Hormas.
Good afternoon, Bamakshi. You just heard numbers from PFC and the stock has now surged to the highest point of the day, a 41% growth in its core income, asset quality also improving from the previous quarter. So good numbers from PFC. The stock surging to the highs of the day, now almost 3% higher there. But there are a lot of other earnings reactions also that we are tracking today. JK Tyre is one of them, and despite weak results, the management commentary has been strong on the road ahead and 10% higher on the stock, continuing to move from strength to strength. Dixon, any bounce that has been seen on the stock has been very swiftly sold into, and Dredging Corporation too at the highest point of the day, now 15% higher after its results. So defense stocks are seeing a bit of a recovery after that bout of profit booking that we saw earlier in the week. Bharat Dynamics, Data Patterns, of course, positive commentary, and Solar Industries too, positive commentary from the management, 5.5% higher on that stock as well. Midcap Pharma is one segment that has been buzzing since the morning. Biocon, of course, after the drug launch that they had in Japan. Kaplan Point is doing well for itself, as is GSK Pharma. Some of the other stocks that are doing well on the volumes front, here Tata Tele is one of them, 5% higher. Amber Enterprises off the highs of the day, still 3.5% higher, and Go Digit is trading with gains of around 6.5% on very strong volumes. And lastly, some of the other losers in the broader markets, and Newgen Software is one of them, was an outperformer earlier in the week, so seeing some profit booking here. Signature Global too, one of the few real estate stocks not doing well. Radico Khaitan as well, and KPR Mills recovering from the lows of the day, still down around 3.5%. Back to you guys.
Thank you so much, Hormas, for joining us, giving us a sense of what exactly is transpiring today as far as the broader end of the markets are concerned. But it's a good time to welcome Rajesh Palvia from Axis Securities for a technical check on the market. Good afternoon, Rajesh. Thank you so much for joining us. Well, the brief dip that we saw intraday has actually got bought into. Yesterday, last hour, you did see some selling pressure. Have we decisively broken out of that particular negative selling pressure?
Good afternoon. So, looking at the volatility in market, we believe that stock specific action is likely to be there in the market, but the benchmark indices are likely to remain in the range only. For Nifty, 24,600 is the important put based concentration support area, and again in intraday dip also we have witnessed that again Nifty managed to defend those the put based concentration support area. On the higher side, the major call concentration is placed at 24,900, 25,000 strike. So until the Nifty not crosses above 25,000 level, 24,900 decisively, I think we may remain in range only. And I think Nifty may consolidate furthermore. Breakout about 25,000 may attract short covering action, and then possible rally can extend further to 25, 200, 300 zone. But I think for some couple of days, it would be a range bound kind of activity for Nifty, 24,600 on the downside, 24,950 on the higher side. For Bank Nifty, it's trying to negotiate with its major call concentration area of 55,000 to 55,200. This is the range where major call writing activity has been witnessed in last couple of days. So until the Bank Nifty not process above 55 200, it may also remain in the range of 54 700 to 55 200. This could be the possible range for next couple of days, and either side breakout or breakdown will decide the major direction from here onward. But in this volatile market, some of the pockets like real estate, pharma, metal, defense, these are all pockets are showing good strength, and I think buying interest is clearly visible in this segment for intraday perspective.
Sure, thank you so much for that, Rajesh. This is Vamakshi joining in. So where would your buying interest lie as far as some stocks are concerned?
So I think real estate space is looking attractive, and DLF is clear outperforming stock from that segment. The stock managed to give breakout of falling channel on the weekly chart, and the way open interest has been added in last couple of days for the stock, we believe that DLF can extend its gain. The next target we are projecting towards 800 to 810. One can buy and accumulate this stock with stop loss of 758. Another stock is from the defense space, that is Bharat Electronics. Stock is clearly enjoying its new all-time high trajectory. The way stock managed to view breakout of its July 2024 swing high, I think here we could see further buying action to emerge, and then next target towards 410 would be there. So BL can be looked at for buying and accumulate in the range of 378 to 372 with stop loss of 365. And the third stock where we are focusing from the PSU banking basket, that is Union Bank. This stock is also looking very attractive. We believe that here also we could see next target towards 145 to 148. So one can deploy long trade here also with stop loss of 135.
Thank you so much, Rajesh, for joining us, giving us both your view on the markets as well as your top trading bets. Well, as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Families have been in the gems and jewelry business for centuries. In your case, centuries. In your case, how long?
Decades.
Decades, okay. And you didn't want to do anything with the jewelry business, but yet in 2005, both of you decided that it sparked the fire within. What happened there?
Aditi's always loved jewelry. I grew up watching my dad in wholesale gemstones, and I always thought it was a sleepy, antiquated business, so never really wanted to get in. Life, of course, comes full circle. So my first brush with jewelry was in college. Kind of crazy story. Ratan Tata came to speak to campus for us, and I introduced myself and I said, I'm such a big fan, but I just want to let you know that when I go from Delhi to Jaipur, I'm behind a Tata truck, and the exhaust is coming straight into our car, and I fall sick. And so if you can fix that, that would be great. And we had a couple of minutes of conversation. He said, give me your details. And so when he got back to India, he then wrote me a letter saying, next time you come to Bombay, I would love to meet you there, which is insane. So go to Bombay, and we had a 3-hour conversation, and he's like, why don't you visit Tanishq? Tell me what you think. And that was my first brush with jewelry retail.
Welcome back. You're watching Midcap Radar on CNBC-TV18. I'd just like to highlight a few stocks for you all. Some of these counters have hit an all-time high. This includes BEL, from the defense space. That stock has again roared back into action today. APL Apollo is the other counter that has also managed to touch its all-time high. CEAT is another counter that is also a buzz in trade and has also managed to touch its all-time high. As far as some capital market plays are concerned, they also seem to be gathering momentum in trade today. Look at the moves on Motilal Oswal. That stock is seeing a very strong uptick. As far as GM Financial is concerned, that also stock is trading higher, and so is Angel One. But let's also speak about some digital platforms. PhonePe is the one that is in focus. Will they or won't they? That's the question on everyone's mind as the digital payment firm PhonePe eyes the D-Street repute. CNBC TV18's Shireen Bhan spoke to Samir Nigam, the founder and CEO, and Rahul Chari, the Chief Technology Officer at PhonePe, on IPO plans. Listen in.
You on stage in August of 2024 said that I want to have the ability to look somebody in the eye and say that I have a clear path to profitability before I can say that I will IPO. Can you look me in the eye and tell me what's changed today? What gives you the confidence of wanting to go for an IPO today?
I'm not sure I said exactly that, but
paraphrasing, but broadly that.
I think the profitability part of it, we shared our annual report for FY24 already, and we were adjusted PAT positive for the first time, so I'm very happy about that. I think directionally too, I think the company's at a stage where I feel like the core payments business, consumer and merchant combined, is at a stage of maturity and market leadership where we should, hopefully from here, remain sort of very, very stable and hopefully quite profitable in years to come. Conditioned well enough to say without setting any targets or goals. I think it's the right time. I think the business is in a good place, the org is in a good place, the sector is in a good place. Payments is still growing very rapidly. So if you're a market leader in a growth sector, I think it's a good time.
So Rahul, did the two of you sit and have a conversation about it makes sense to do it now? This is the right time, this is the moment, and we should go all in?
Oh yeah, we have a conversation about everything. I think we have more conversations with each other than our wives.
Well, you've known each other longer than you've known your wives, so it makes kind of makes sense.
That is true. No, we did have a conversation. I think like Samir mentioned, just given the current state of the org and the business, specifically on the core offering that is payments, given how exciting financial services and payments in India is, and the fact that we also have a few new businesses that we are diversifying into, we felt that this is the right time where the core business on the path to profitability, being able to actually nurture new businesses, is the right time to take PhonePe to the public markets. It is also a reflection of our maturity as a company from a compliance and governance perspective, that we are ready to actually take on this larger role. So yeah, we did have the discussion and felt that it's perfectly the right time to actually push forward.
I think we knew that we'd want to actually eventually list.
Because
a few years back, because we moved to India with that whole view.
Exactly. I mean, to pay a hefty bill of 8,000 crore rupees to reverse flip and move back to India, I would imagine had its roots in this eventual decision, right?
Of course.
I think directionally, if the right answer for a business like ours is to list, then this is the right market. I mean, I think we're very proud of the fact that we are a household name or brand in the country today. It doesn't make sense to list anywhere else. So I think the reverse flipping was a precursor towards an eventual listing someday.
But, I want to understand for the two of you, what's the motivation to list? I mean, we've had this conversation with several founders. Some have decided to go the IPO route and some have decided not to go the IPO route.
Sure.
Another one of your peers next door, Zerodha, choosing not to go down the IPO route, even though that is a very real possibility for them. What is the motivation to IPO, besides, of course, providing exits to whoever would want an exit?
So I think that last part is a big motivation for companies like ours that actually have outside investors. So Zerodha is a good example where
They
they're
have
wildly
not-
profitable
yeah.
and the family owns the entire company. So I think they can get the liquidity that they desire through dividends, but more importantly, they can keep investing in the future of that company also through their bottom line. We took a path which is, well, the sort of tried and tested path of getting outside in capital.
Yeah.
And it's also a very fiercely competitive market when you're actually trying to build on microtransactions at population scale. So we needed that capital. We didn't have it. So I think in this case, you have to have a steady liquidity environment, not just for us, employees, shareholders, current and future. I think that's one part of it. We're blessed. We don't have a rush on that front. We have the money to invest in all the businesses that we need to. We have really good investors, both. I think for us, it's more the nature of our business. We're just so heavily regulated across all the financial regulators now.
Yes.
Wanting to operate not just in payments but in other sectors also at population scale. I think the governance the stamp that comes with public governance standards is a higher order stamp than being privately governed.
Well, that was a very interesting conversation Managing Director Shireen Ban had with the founders of PhonePe. All eyes now on the likely listing of that particular company. But we'll now slip into a short break. We'll get in more on the markets and stock-specific action on the other side. Stay tuned.
We see as well.
Welcome back to Midcap Radar. Well, a couple of stocks on the radar. First up, you just saw the numbers of Power Finance Corp flash on your screen. That particular stock is holding quite well. The stock is up almost 2.5% in the session. You'll hear from the management soon in another 10 minutes or so as to what exactly transpired in the quarter gone by. More importantly, what will be the AUM guidance as far as the coming years are concerned. The other stock, a couple of stocks actually that have hit fresh intraday lows are two stocks from the Aditya Birla Group. Have a look at Grasim Industries as well as Ultratech Cement. Both of these stocks now trading near the day's lowest point. All eyes will also be on one stock from the banking pack, and that is IndusInd Bank. Remember, IndusInd Bank will deliver and report its results later today, and lot of news flow has come about in this particular counter, and IndusInd Bank now near the day's lowest point, and all eyes will be number one on what are the kind of provisions that they've taken in Q4 and what is the way forward as far as IndusInd is concerned. But moving on, one stock from the broader end of the market that's doing very well is Solar Industries. Riya joins in with details on the Q4 earnings, the takeaways from the management call as well as brokerage notes.
Well, yes, Solar Industries reported its quarter 4 and FY25 numbers yesterday. For the full year FY25, we've seen a revenue growth rate of around 24%, which is below the company's guidance of around a 30% revenue growth rate. On the margin front, that has been above the guidance of 25%. Margins have come in at around 27% in FY25, up around 365 basis points over the previous year. The international business grew by around 18% over the previous year, and the FY25 defense segment revenue was up around 162% compared to FY24, but still missed the company's guidance of 1400 to 1500 crores of revenue, coming in at just about 1355 crores. The order book for FY25 stands at about 17,000 crores, of which defense constitutes almost 90% to the total order book. Now, coming to the guidance for FY26, the company has said that they are going to grow their revenues at around 33% over the previous year. Defense will constitute more than 30% of the total revenues compared to the 18% contribution in the current year. Capex will be around 2,500 crores for FY26. Today, in an interaction, the company also told us that they are expecting emergency procurement order finalization to happen in the next couple of months, and they're expecting substantial order inflows on this front. For the Pinaka order, execution will start by around quarter 2 of FY26 or latest by October onwards, and they're expecting around 550 to 600 crores of revenue on an annualized basis from the current 2 variants of the Pinaka orders that they've received. As more variants come up, they are going to see a revenue of around 900 to 1,000 crores from these Pinaka orders over the next couple of years. They've also highlighted that defense is going to contribute around 40% of revenues over the next 3 years. Now, on the back of this, Antique has also upgraded the stock to a buy rating. They have a target price of around rupees 15,570 on the stock, which is an upside of around 15%. And reacting to all of this, the stock has been trading higher in today's session.
Well, thank you so much for that, Ria. That was Solar Industries for you. A good set of numbers. The stock is trading higher by almost 5%. But another counter, Dredging Corp, is firing up in trade today. As of now, the stock is trading with a gain of almost 15% after its Q4 numbers. Vivek, how are the numbers for this company?
Well, it's clearly not trudging, it's dredging in today's trading session. Have a look at the Q4 results. You know, the Q4 results optically very strong, but you have to remember that it comes off a much lower or a muted base when it comes to Q4 of FY24. Well, revenues for Q4 higher by 66.5%. The EBITDA has gone up fourfold as far as Q4 is concerned. Multiple one-offs and also of a lower base. Margins have gone up more than 1,000 basis points. Profitability this time around of a little over 20 crore versus a loss seen last time around. But it's also a good idea to have a look at the numbers on a sequential basis. There too, there is significant operational improvement that we are seeing. Revenues higher by a little over 40%, EBITDA higher by over 45%, margins again expanding over 40 basis points, and profitability up 33%. However, one thing that you need to recall is FY25, the company still not managed to turn in a profit. So Q4 operationally very strong, a clear, the company finished FY25 on a strong note, but there's a loss on the bottom line as far as FY25 is concerned. Company has very strong long-term targets as far as FY27 profitability is concerned. But on the back of the sharp improvement in the quarter gone by, you're seeing a 15% uptick on strong volumes today.
Well, absolutely, Vivek, so hoping for a good recovery for Dredging Corp in FY26 as well. But apart from that, if you can pull up the chart for JK Tyres, of course, it was not a great set of numbers coming in from the company. But, largely with the crude prices now falling, the internals look very attractive for companies like these, especially going into Q1 and Q2. We saw similar moves despite a weak set of numbers. Apollo as well as MRF, both after the numbers perked up in trade. But with that, that's all we have on this edition of Midcap Radar. From Vivek, me and everyone who put the show together, thanks for tuning in. Don't go anywhere. We will have your stocks when we return.